Well, here we are in July of 2022. And in this video, I'm going to go back and do a market update for what we've seen here in the Lakewood Ranch area for the first 6 months of this year. And we do see the market continuing to shift in a more balanced and neutral market. So if that's of interest, stick around. I have all the info coming right up.
Which looks better, 1 or 2? 2 or 3? 3 or 4? 4 or 5? For a complete checkup, see your local realtor.
Hello, it's MarkBoehmig, Michael Saunders and Company. Today is June the 13th, 2022, and I ran a market update through the first 6 months of this year for the Lakewood Ranch area. And I wanted to share that information with you because we are continuing to see a shift in the real estate market here because things are changing quite rapidly, as you well know. Now, interest rates have dropped a little bit recently, along with gas prices and lumber prices. So I think that that is a good signal for the upcoming future for the remainder of 2022. But we don't know what's going to happen. I can only tell you what's happened so far this year. So let's dive in and take a look. So as you can see right here, I ran some numbers for the area of Lakewood Ranch through the first 6 months. And one of the big things that we've noticed here is that inventory is continuing to climb. And if you can look right here, we had 126 homes that were on the market in June as compared to only 73 the month before. So as our inventory continues to increase, that's going to give the buyers a lot more choices of homes that they have to choose from, which is going to do several things in the future, and I'm going to cover those in just a minute. So with inventory rising, that means that things are going to stabilize somewhat. Now, we don't get to a balanced market until we have about 4 to 5 months supply of inventory. So let me go to the next slide and show you what else we found. So our average price per square foot is remaining relatively stable. We did see a little bit of a dip last month. So we saw prices from the previous month at $374 a square foot, and they've dropped to $358. But 2 months ago, it was $355. So if we don't see more than a 5% decrease, we figure that that's pretty stable. So, but that is an indicator now that we do have more homes on the market. Also, if we have a very large sale, that can skew the numbers to a higher point. And then conversely, so if there's some distressed properties that have sold for much smaller amounts than normal, that also can contribute to the drop in the price per square foot. The next thing that we see here is days on market. So how long is it taking for these houses to go under contract? Well, we had a pretty significant jump last month. We've gone from a low of 6 days on market, then it went to 11, and last month it was at 14 days on market. So that's a 27% increase in how long the houses are staying on the market. So if you think about it this way, if someone is looking for a house and they see that it's been on the market for 30 days, they're going to think that they can come in somewhat lower than the list price, which is typically usually the case unless at that one time you have multiple offers on the house. And I have seen it so that houses have sat on the market maybe 2, 3 weeks, 4 weeks, and then all of a sudden you get a flurry of inquiries and then they have multiple offers. Those tend to stay close to the list price. The next thing we're seeing is what is it that the houses are going on for list price and what are they selling for? So the average for sale and the average list prices are down slightly over the last month from comparatively a high that looked like it was back in about March or April. So we're seeing a little bit of decrease on the list prices because the sellers might have thought that they could still tap on to the high increases. And sometimes when they've been on the market for a little while, then they're having to lower their prices. And then the last thing that we're going to talk about is our months of supply of inventory. So as you can see here, it really had a spike, and that's because we went up to that 126 or whatever that number was for the number of homes on the market. So now it's showing that we have about 1.5 months supply of inventory, which in in realistic terms, that's still relatively low because we would need about, like I said, 4 to 5 months of inventory for it to be a balanced market. So this is far from a balanced market. So we are seeing a rise in inventory, and you can see back in April of 2021, we only had zero point 0.2 months supply. Now we have 1.5 months supply of inventory. Now, one of the other things I alluded to was the interest rate. So Freddie Mac is showing here that the average interest rate for last week was 5.3%. And that's been down. That's down because some of the areas around here saw actually 6%. And I know this says 5.7, but now we're down to about 5.3%. So with the decrease in the interest rates, that's going to give a little bit more interest to the buyers that are getting a mortgage to make it just a little bit easier on them. But when it was down at 2.9%, that was relatively low for interest rates. I can remember in the early 80s when it was 15 and 17%. So historically speaking, we're still at relatively low terms for interest rates. And lastly, what are the experts predicting for the rest of this year? Well, right here is like it says it depends on where the mortgage rates go. But another thing is that they're saying that they expect the supply of inventory to increase on homes, which I agree with, and we see that that is happening now. So with the increased supply of inventory, they're forecasting that our home prices are still going to be on the increase this year because we still won't have enough supply to meet the demand. So we're seeing this is saying 8.5%, maybe down to a low of 2.7% as far as the amount of home prices increasing. So I'd be very interested to hear what you have down in the comments below, what you think about the inventory or the overall housing market, not here just in Lakewood Ranch, but perhaps maybe in your area. I hope you got value out of this video. And if I will put a link to all of this information in the description below. So if you want to actually see the numbers that we generated here in the Lakewood Ranch, I'll just put a direct link so that you can get that report and look at those numbers yourself. Mark Boehmig, Michael Saunders and Company.